I want to bring in my first guest. Tom Alexander knows a lot about identifying where opportunity presents itself for us as traders. Tom's the founder of Alexander Trading LLC. Tom, it's good to have you with us. Good morning.
Good to be here, Ben. Thank you.
A busy month for stocks and stock index futures products. Typically, September isn't a good one for investors, but I'm hearing about how we should brace ourselves, buckle in, because October is normally a volatile one.
Yeah, there's a lot of seasonality that historically has come into play with lows being made in this time frame. But, you know, the catch-22 here is, and I do think that time-wise, we're close to a really sharp rally. In the meantime, though, as you had just pointed out, these June lows are critical. And if we take out these June lows and if the NQ, the Russell, the NASDAQ, and the Russell follow to lower June lows, we could have one of these 2008 waterfall declines for 3 or 4 days before you get the rally. So, maybe we're going to bounce 10 or 12%, but we might be down 10% first.
Yeah.
So I tell you, yesterday's lows, Ben, are really, really, really important.
Okay, Tom, I've got a chart here that you sent ahead. It's got, identifying the June lows, the test of yesterday. You mentioned we're seeing, again, a little bit of a lift off, but it sounds like you're expecting a little bit of volatility as well to continue. But you've also got your eye on this 3,400 level. Is that where you would see the next area of support? Should we continue to the downside?
Yeah, if we take out yesterday's lows, the next quote-unquote level of support from an objective perspective is down around the breakout from or the high of the pre-2020 crash, and then we look above that level. So yeah, we're looking down around 3,400. That could happen if we break these lows and all 4 of the indices do close below their June lows. I think you'll see that level pretty quickly.
Okay. We're looking at it here. Tom, you also brought to our attention, as I was pointing out in your notes, you've got your eye on a couple divergences that are playing out. I mentioned again, this is going to be my chart of the day, so don't steal my thunder here, all right? But we're talking about the NASDAQ, reluctant to participate to the downside, the broader base representation, the Russell. I'm sort of tying that weakness in the Dow and the ES to these multinationals, especially the Dow. It was the first one to take out the June lows, if you remember. I'm chalking it up to the strength in the U.S. dollar, but this divergence nonetheless should be watched.
Oh, absolutely. And then, the bullish case for this market right now, to me, is if these 4 indices, all 4 of them, can close above yesterday's cash session highs.
Okay.
If they do that, then I think we'll see some upside momentum.
Okay, so we need some follow-through to the upside, you're saying?
Yeah, absolutely. Yes.
We're
right in the middle of that range right now as we're speaking, the futures are.
We're looking at your chart where you identified the NASDAQ holding above those June lows again, right around this 11,000 level. But Tom, does this divergence support the bullish narrative?
It does.
Okay.
And you will almost always at significant pivot turns, especially from the downside at lows,
see something like this? Yeah.
We'll see. It's uncanny.
Yeah.
Not sometimes tops are coincident, but usually at market lows, you get something like this.
To that point along the lines, Tom, and I like this conversation because this is a big part of what you teach, right? The idea of, look, if you've got 2 of the 4 majors that are taking out and posting new low prints, it's very suspect if you don't have the other 2 participating, right? It's going to be very difficult for them to follow through and see that energy, those lower lows and lower highs, that high conviction trade with participation with energy in the ES and the Dow to the downside if you're not getting the NASDAQ and the Russell participating as well.
Absolutely. When there's a significant move in the U.S. stock market, all the indices
the door opens up.
Yeah, it just, the institutions come in and they sell everything or they buy everything. And right now there's a divergence there. So the jury is out on this thing. Again, yesterday's highs are important for the bullish case. Yesterday's lows are critical, and I wouldn't want to be caught long for long. Below yesterday's lows.
I hear you along that line. So this divergence is bullish unless it resolves itself to the downside, it sounds like, and opens up the door to the downside. And then we could see energy here if all 4 majors take out New Year low prints here. Tom's got a chart here he wanted us to take a look at real quick. I think this speaks to it very well. And I want to be careful here because, again, I'm going to focus a lot on this in terms of my chart of the day today. But this is the Dow, large caps, taking out the June lows. But here you can see, look at the Russell, small caps. They were unable to take out the June lows. So a major divergence playing out here. Tom, you also sent forth an S&P weekly, a couple daily charts. Is Does this just sort of feed into this point here as far as looking a little bit more closely? Because there was some text on these charts. Have you brought these points to our attention here? Because then we can move on to a couple commodities you're dialed in on as well.
No, absolutely. I mean,
Okay.
if you look on a weekly chart, and that June low is critical. Below that June low, you're in an elevator shaft to the downside, all the way to 3,400 minimum probably.
Okay, give me just 1 second here because Tom had, whoops, hold on 1 second. Let me pull this chart that Tom wanted us to show again. Just getting into this weekly chart here, Tom, and to your point, this is, again, the bigger picture look, and Tom's dialed in on the critical level here, the essential level, and how if we do open up the door to the downside, you could see the next big level, as you mentioned, is 3,400. I like to look at the bigger picture, Tom. You taught me that years ago. When in doubt, zoom out, and don't get too consumed or caught up in the tick-for-tick aspect of trading. That's what oftentimes is the downfall for many of us. Talk to us a little bit about gold, because we've seen, speaking of divergences, that very well-defined inverse, that divergent price activity you see from the U.S. dollar, right? When the dollar's rallying, gold's breaking. That's been very well-defined on an intraday basis, but you've got your eye on the bigger picture here as well.
Absolutely. And, we talked several weeks ago, and there was a level in gold that had to hold. Well, it's broken now.
Yeah.
And if
you sent me an email. You said it was at a big level right now, and if it broke down, we could see some energy. And it did through 1,700.
Yes.
Make a break point, you called it.
It is. But it really has only accelerated one little bit. And so far, what we're doing, we are making a very, very sort of control series of lower lows and lower highs. For me, everybody always wants to buy gold for some reason, but the trend of this stuff is down.
Okay.
And it's sort of in the middle of nowhere too, and it's subject to acceleration lower. Now, I'll change my mind in a second if it breaks this pattern that it's in on the daily charts of making lower lows and lower highs. It's very, very clear. There you go. You've got to see something above about near 1,700 again for me to get excited about the long side of gold.
Tom, the word pattern you use there, I really like it, because speak to us real quick about when you see a big move like this, a double top in gold up around 2,100, a big trend to the downside, high conviction, migration of value, all of these things that you really look for if you're bearish, this product, lower highs, failed attempts to rally back. I mean, you start to look for the characteristics within the trend that make up the trend, and you look for them to repeat themselves over and over again in terms of kind of pairing or establishing your expectations.
Oh, absolutely. And, as a trader, I have learned, trust me, the hard way, not to fight the trend of markets. And there are a number of different ways you can define a trend. You can put a moving average up if it's above or below it. But for me, really, the simplest and the quickest way to identify a trend is take a look at a chart. Is it making higher highs and higher lows, or is it making lower lows and lower highs? Yeah. And then you can, the trader can go down in time frame and fine tune that. And get more granular, but on a daily chart, it's clear gold is in a downtrend right now.
You also taught me a while ago a big part of that is just trying to determine value, right? And then as a trader, you try and participate in the trend and hope it continues. If it doesn't, you look for the next one, right? You don't necessarily beat yourself up over that because it was the market that didn't go in the way that it was supposed to. It wasn't a poor decision on your part. Let's talk a little bit about crude. We've got just a little bit of time here. I want to get crude and the U.S. dollar into this discussion real quick. Looking at the daily time frame here with your notes, what should we be watching?
Well, crude is in a similar situation as gold. It broke a very important trend line. And it's sort of been chopping around. It's been very whippy on a day-to-day basis. You obviously have the obvious macro attributions for that. But you look at gold. I mean, crude. It's sort of similar to gold right now. It's making lower lows and lower highs, and has been since the end of August. Yeah. And unless that changes, I can't be excited about being long crude, except maybe on a real short-term day trade type of basis. A
very similar chart here to gold, crude oil ultimately, again, coming off. Let's talk a little bit about a big influencer here, whether you're talking gold or crude. As I mentioned, that very well-defined inverse correlation with gold, but crude as well. I mean, these two products, when you see the dollar rallying, ultimately these have been coming off for the most part.
Yeah, everything is tied to yields right now. I mean, that's no big secret. Yields, the dollar, everything is so highly correlated in a certain way right now. Now, I've said before, you have to be careful with correlations because they work wonderfully well until they don't. Yeah. But right now, things are highly correlated to every tick in interest rates, the dollar, crude, gold, stock indices. It's just an incredibly highly correlated world.
Here you can see again, as Tom noted, trend is up in the dollar. And again, whether you're talking about the short term, the long term, lots of opportunity here within these products and these relationships that these products share, as well as divergences that present themselves and opportunity within. Tom, a great breakdown here today. Really appreciate you joining us, guys. Check out Tom Alexander at Alexander Trading LLC. And as always, a great breakdown, a look at the technicals and discussion in terms of approaching trading through the lens of auction market theories and concepts.